All right, we'd like to welcome you into the third edition of our Terriers Together podcast, and we've got an exciting one today that I think a lot of people will find useful, and especially some of our younger alums. I'm Tom Henson, class of 96. I'm the Director of Parent Engagement, and we're joined today by Bonnie and Angelyn, who are both a lot younger than me. We have already established and are well-versed in their careers as a realtor and working in finance with loans and being attorneys and all that kind of stuff. And so to start, Bonnie, we'll have you guys, we'll start with you. Introduce yourself and just a little bit about your background.
Sure. My name's Bonnie Stroup. I am a real estate agent / broker in Charlotte, North Carolina. I was Wofford class of 2012. I graduated in 2012 and moved directly back to Charlotte. I was in collegiate apparel sales for 6 years out of college. I actually got that job because I was VP of recruitment at Wofford for Panhellenic, which I loved for a long time, for 6 years. I was on the road 4 or 5 days a week. It was a wonderful first job. I got great sales experience, but the travel finally got to me. So then I decided to take a job in real estate where I never leave Charlotte, and I couldn't be happier.
Awesome. All right, Angelyn, your turn.
All right. Hey, everybody. I'm Angelyn McDonald, Wofford class of 2009. I majored in finance and minored in economics, and I am from Sandy Springs, Georgia, right outside of Atlanta. Grew up there. I went to Wofford and almost came right back. I spent a summer in DC after I graduated from Wofford, and then I moved back to Sandy Springs. I have been there ever since. I did a couple of different things in my 20s. The biggest piece of my career was serving as the press secretary for a state agency in Georgia. And while I was doing that, I decided that I wanted to go to law school. So I went to Georgia State Law and graduated and got my license as an attorney in 2019. And I have fairly recently, during the pandemic, begun a new career as a mortgage lender with First Horizon Bank. And I'm working in Atlanta. We operate in the Southeast, and I'm just really grateful to be here today.
Awesome. Well, we appreciate both of you guys joining us. Before we get into the buying a home and the nuts and bolts of that, what I always like to ask our alums is, what about your professional experience has been shaped by your Wofford experience, or in your day-to-day work? Are there times when you think of things that you learned at Wofford? And Bonnie, we'll start with you.
Sure. So I think, I majored in business economics and then a minor in art history, which two completely different sides of the spectrum, but I think it made me well-versed. But I think the most important thing I got from Wofford were the connections that I still, use today, especially in my career. I have clients who went to Wofford who I met at Wofford. I have clients that were friends of my dad's when he was at Wofford. So I'm very fortunate that a lot of Wofford alum moved to Charlotte or moved back to Charlotte. So I have a great network there that has really, grown my business. So I'm very fortunate.
What about you, Angelyn? What's in your work? What do you draw upon from your Wofford time?
Well, my job is very directly tied to my Wofford education. Having a major in finance, that was what I loved when I was in my early 20s. I wanted to get an MBA in the worst way when I graduated from Wofford, and I was so upset to learn that you really couldn't get into business school without 2 years of work experience. And so I did other things. And a lot of that was graduating in 2009, probably other than 1929, maybe the only time in history when having a finance degree was not helpful in trying to find a job. So I took an internship in DC, and then I dabbled in political campaigns for a little while back in Georgia. And I did have one job that was finance related, but it was really kind of rote and monotonous, and it just wasn't for me. So I went in another direction, which was focused on communications, and developed a career out of that. And I really enjoyed it, but I had a unique opportunity to get back into finance last year. And I really think this is a perfect job for me, because when I was in college, I thought I wanted to be an underwriter, and underwriters are extremely important. We work with them a lot, but I realized I am so much more fit for a sales role. And so I get to use my background and my Wofford education to understand the nuts and the bolts of the business that I'm in, but I also get to use communications and I get to use my legal background to connect with clients and make sure that we're providing the best service. And I would also say that my degree directly helped me get this job because I did not have any experience in banking, but I had a finance degree and I had taken a class in real estate finance, and that helped me and has been very useful to me now.
That's great. I think everybody that is associated with Wofford that goes to school here, you find ways that you may never think of that we use our Wofford degrees. All right, let's get into why we're doing this, and that's about home buyers and buying homes, and especially for younger alums buying the first home. And so, Bonnie, we'll start with you on this, and we'll kind of go into the lending part with Angelyn. Let's say I'm been out of school 3 or 4 years and I'm trying to buy my first home. How do I start? What do I do to start this from the realty side? And then we'll move to Angelyn for the financial side of it.
Sure. Yeah. So the first thing you want to do is reach out to a realtor, a licensed realtor. I highly suggest you find someone who does it full time so they know the market super well in whatever area you're trying to buy in. Then step 2 is to definitely reach out to a lender to see what exactly you can afford. And then depending on those 2 conversations, we kind of guide you in the right direction on time frame and where exactly we're going to start looking to buy a house. So I can definitely get into more of the nitty gritty after Angelyn kind of talks about the loan side.
Angelyn, what's the first step from the lending side? I know I'm going to buy a house. I've hired Bonnie to be my realtor. What do I need to learn from you? What's my next step?
So it's a great question, and thanks for the setup, Bonnie. If you want to buy a house now, or even 6 months from now to a year from now, I really recommend talking to a trusted mortgage professional. And if you're ready now, absolutely, you need to be working with a realtor. But if you're just thinking about it and you're not really ready to start looking, you could still get in touch with a realtor, because that'll really help you kind of know what's out there. But it is so important to talk with a trusted mortgage professional, somebody who can help you lay out a budget and design a roadmap with you that will enable you to purchase the house that you want. I know we're going to talk about myths of home buying later on in the program, but one thing that I wanted to say now is that a lot of people think you have to have 20% down to buy a house, and many times that's not the case. However, you also really want to make sure that you're not overextended. And by having a conversation early with a lender before you get your heart set on something that may be a stretch for your budget, even if the bank tells you you can afford it, that doesn't necessarily mean that you should spend that much. So I think that's really important. We do pre-approval letters for people all the time in this market. And Bonnie, you can weigh in on this. A seller's not even going to look at your offer if you haven't been pre-approved by a lender. So
absolutely not.
That piece is really critical. And we can also help you manage debt. You know, if you have some debt, maybe that's going to get in the way of your ability to buy the house you want. We have the experience to give you some advice and guidance on what to do or what not to do with debt to make sure that your purchasing power is where you want it to be to meet your needs and your goals.
Awesome. All right. So I've got my realtor. I've met with Angelyn and gotten kind of pre-approved. I know what I can afford. I know what my financial base is, let's say. So now, Bonnie, where do we go from here? What's my next step in trying to purchase a home?
Yeah, next step is to meet with your realtor and kind of narrow down exactly what you're looking for. We'll ask a series of questions of what's most important to you, what neighborhoods you want to be in, if your family's growing, what's most important as far as, low maintenance, high maintenance, yard work, etc. So we'll sit down and have a big conversation about that. And then from there, then we start to look at the houses. So it's really important to talk to the mortgage lender first to see what exactly we can afford to look at. From there, then we narrow it down. So that's why hiring a realtor is so important, because they are advocating on your behalf. So when you find a house that you want to go look at, it is listed by a listing agent who represents the sellers. you want to find a realtor who is going to represent you as the buyer. So if you called the number on the sign that says it's listed by so-and-so with so-and-so brokerage, they are going to be representing the seller. So you want to make sure that you have an agent representing you as the buyer.
All right, Angela, Bonnie has helped me and I found the house I want. What's my next step from the financial side of this?
Okay, so are we under contract?
Yeah, let's back up a second. Bonnie, let's say I find my house and I make an
Sure.
offer.
Yes. So what we can do, why you have an agent, is to help you guide you through the process. So we're going to sit down with you, say you are in love with this house, and we sit down and we talk about the terms, about what we want to submit within an offer. And another advantage of having an agent acting on your behalf is I have great relationships with a lot of the listing agents. So I will call the listing agent and find out what's most important to the seller, whether it be time frame, highest purchase price, if they need a seller rent back situation, if they want to take the fridge with them, whatever it may be. That's why you have an agent negotiating on your behalf to find out those hard questions to make your offer the most attractive. So with that offer, you're also going to want to attach, like Angelyn said, a pre-approval letter, not just a pre-qualification letter. Sellers are going to find a pre-approval letter the most attractive.
So I make the offer, the seller accepts. Angelyn,
Yep.
What's next from your part? What's the next step for on the financial side?
All right, so as soon as you're under contract, you want to get that contract to me or to your lender, because the clock starts ticking the day that you go under contract. And it's very important to be able to get everything done and meet your closing date. That's number one priority. I mean, purchase transactions are two-party transactions. It's not like a refinance. So, you've got a buyer, that's our client, that's Bonnie's client, who needs to move in, but you've also got a seller who needs to get out of that house and be able to get in their next house or wherever they're going. So you want to get that contract over to your lender ASAP, so that we can get you submitted to underwriting. The underwriters are the ones who review your application and your income and your assets and make sure that you're actually eligible for that loan. And then at the same time, we're going to order an appraisal. On the real estate side, Bonnie's going to get you set up with a home inspection to make sure that there are no latent defects or things that you might not have seen when you were looking at the house that either might be a deal breaker or might cause you need to negotiate the price or get some other concession from the seller. And so there's all these moving parts that are going on behind the scenes, most of which the buyer isn't really involved in, but they're very important, and some of them take time. And so you got to get that contract in and be, the more organized you are as a buyer with things like your W-2s and your bank statements, the faster we can get you through the underwriting process and get your loan approved and cleared so that you can have your closing and everybody is happy.
Well, all right, let's move to the closing, because there's parts to that. Bonnie, from the realtor side, what do I need to know about a closing date and a closing appointment?
Yeah. So once we go under contract, then you are contingent. So we are under contract on the property. That's our time to perform inspections, get a survey done, get an appraisal done, do repair negotiations, prepare ourselves for closing. So during all of that time frame, Angelyn, the loan officer, is also working directly with the agent. So it's really important to have a broker that has great relationships with their lenders, because we are in very close proximity and close communication throughout the whole process. So we're kind of working in tandem to make sure we're going to meet that closing date. So normally the time from contract to close is anywhere from 25 to 45 days, depending on the specific situation. So as we, get through the milestones of that under contract process, then we're going to be moving towards that closing date. And right before the closing, you're going to get a final closing disclosure that basically has what exactly you need to bring to closing as far as cash. And the lender will go through all of those debits and credits with you before you get to closing. Then we go to the closing table and we sign. And once the deed is recorded, which is usually the same day as you sign at closing, then you get your keys.
Angela, what about from your side of the table on closing and closing costs and all those kinds of things?
Well, Bonnie did a great job of giving a rundown both from the realtor side and the lender side, but like a lot of the work really does happen on the lender side because there's a house, you want to buy the house, the seller wants to sell you the house. As long as you come together on price and there are, you can come together on inspection issues and an appraisal, really the lion's share of what is going on is getting you approved for a loan. If you think about, you're asking somebody to lend you two, three, four, $500,000 or more, they want to know some things about you. So they're going to require verification of your income, verification of your assets to cover down payments. They're going to look at your credit. They're going to look at things like debt. And that takes a little bit of time to get all that going. But we do purchase closings. 30 days is our target. We do them in less than 30 days a lot of times. Really try not to go beyond 30 days unless there's like an issue with an appraisal or something like that. I did want to hit on, you asked about the closing cost and just thinking about being financially prepared to buy a home. So closing costs can range. There are some that are fixed costs and others that are variable based on the purchase price and the loan amount. So I would say you want to be prepared for closing costs to range from maybe $6,000 in Georgia and in different states. If that sounds high or low, I realize that I'm most familiar with Georgia, although we do lend throughout the southeastern United States and across the country. But I would say probably $6,000 to $9,000 depending on the price of the house. Most of those are actually third-party expenses that are not charged by the lender. Banks typically do have a loan administration fee, like a flat fee. But then you, as the buyer, you have to pay for the appraisal, the fee for the closing attorney. Georgia is an attorney-closed state. I know that other South Carolina, North Carolina, I'm not sure. But if it's not an attorney, it's a title agent. You have to pay for the title insurance, both for the lender and for yourself, and that protects you against any defects in your title. You bought the house from grandma's granddaughter who had a brother who had an interest in the house, but they were estranged, and the granddaughter didn't know. And then 5 years after you bought the house, the brother shows up and says, hey, that wasn't properly probated and I own the house. You really need to have title insurance. So that's what you pay for. And then there's all kinds of taxes because the government is going to get theirs. There's sales tax, transfer tax, and then so those are the closing expenses. And then you also have prepaid expenses, which cover your homeowner's insurance. They'll collect the first year's homeowner's insurance premium because that gets paid up front. And then they'll also collect a reserve of 2 to 3 months of what you would pay for your homeowner's insurance. And then the same thing with your property taxes. And that's what's called your escrow. So there's really two things that a mortgage payment is made up of. You have the mortgage, which is your principal and your interest, and then you have an escrow, which is a set aside for your property taxes and your insurance because your lender pays those. And if you have PMI or mortgage insurance, that would be a third thing that you would pay. Although we have a lot of great programs that keep first-time home buyers from having to pay PMI. So that's another reason to really talk to a lender and get a good idea of what your financial commitment is going to be.
As you know, this is great. I'm not a first-time home buyer, and I've learned something. So this is very informative.
And if I could just add one thing about the cost, because I wanted to give like a final figure. Some people ask, how much money do I need to have saved to even consider being able to buy a house? And I would recommend, of course, it depends on your price point. If you want a $200,000 house versus a $500,000 house, it's going to be different. But I would say to cover your closing cost and your down payment, you really want to have $10,000 to $15,000 set aside. Closing costs for first-time home buyers can be as little as 3%. In some cases, down payment can be as little as 3%. In some cases, it can be 0%, but you'll still have closing costs. And there are grant funds and down payment assistance that are able to help offset that. But generally speaking, you want to have 10 to 15,000 set aside. You can use gift funds if your parents or somebody else wants to help you with your down payment. but it has to be a true gift because you're not allowed to borrow money to cover your down payment.
Guys, what are some mistakes that you've experienced that first-time home buyers make? Go ahead, Bonnie.
Yeah, absolutely. So I think one other thing, that it's really important when talking to your broker and your lender is to shop around. I mean, you want to make sure that you feel comfortable with both your broker and your lender. So if you talk to someone and you don't get a good vibe, I highly recommend reaching out to multiple, because this is a big purchase in your life. It's going to be your biggest asset that you ever own. And it's something that you want to make sure that you feel good about. So I definitely highly recommend, shopping around and doing your research about both finding an agent and a mortgage broker. So that's just one thing. I think that's a mistake that some people make. They, jump in too quick and they feel like they have to go with the first person they've talked to, and that's just not true. So another mistake, at least in North Carolina and South Carolina, you as the buyer do not pay agent commission whatsoever. The seller pays the commission. So it really does not cost you 1 single cent to hire an agent. So it's really, there's no reason not to. And, if you don't have representation, you'll most likely get taken advantage of, which is a high reason why to hire a broker as well. So.
Angela, what kind of mistakes have you seen from first-time home buyers? What would you kind of caution people to be aware of?
Sure, and that's also true in Georgia, that the seller pays the agent's commission. So absolutely.
It's in most states. Some states are a little different, but I think in the Southeast, that's pretty much the norm.
Right. I would say, on the debt side, a couple of things. One, having an expensive car payment. So a question people may not know if they've never bought a home before: how do banks figure out what size loan amount you can qualify for? Well, they calculate a debt to income ratio, and the income is your gross income on a monthly basis. The debt is not just debt, but it's also other things that you're obligated to pay. And that's looking at the mortgage that you're seeking. So they're going to consider your principal and interest payment, the monthly amount for your property taxes, monthly homeowners insurance. If you're buying in an area that has a homeowners association and it has monthly or annual dues, they're going to figure that in on a monthly basis as well. Also, your car payment, any installment loans that you may have, your minimum payments on your credit card, student loans, and that does apply even if your loans are in forbearance. They will look at what the payment would be when you're out of forbearance. In some cases, you might be able to qualify with a $0 student loan payment if the forbearance is for long enough. But for example, with the COVID forbearance that everybody's student loans are in now, they will use the monthly payment that it would be. If you have child support or alimony, that counts as well. So all of those factors have to add up to less than 50% of your gross monthly income, or you won't be able to qualify for the loan. One of the biggest ways that people can screw up their debt to income ratio is having a very expensive car payment. Obviously, it depends on what your income is, but if you're young, if you're starting out, and you have a $700-800 car payment a month, but you make $60,000 a year, that's going to seriously limit your ability to buy a house that you want. If you make $200,000 a year and you want an $800 car payment, probably not going to be a problem with buying a house. But I would really caution people when you buy a car about not letting that payment get too high. That's another thing that a lender can kind of help you understand. Another mistake, co-signing a loan for someone else. Typically, those payments will count against your debt to income, even if the other person is making their payments on time. And the final thing is buying too much house. I say you don't want to be house poor. Even if your lender tells you you can afford the house, if you know that that's a stretch for you, then don't do it. Then downsize a little bit. You ought to set a budget that you're comfortable with. If you don't already live by a budget, I highly recommend starting. There are several free apps that make it easy to track your income and your spending. And I think you should give yourself a cushion in your mortgage payment and prepare for unexpected future expenses, such as needing a new car, job loss, or home repairs, because you don't want to make a homeowner's insurance claim for a repair under $2,500, $5,000. So give yourself a cushion, and then don't drain your savings to buy a house. Reserve funds are typically not required by banks, but you absolutely should have a reserve fund to hedge against anything like your water heater going out. That could be $2,000 right there. You want to have that money set aside. Your car could break down and you need to get a new car. That actually happened to me. I bought a house. I hadn't had a car payment in almost 10 years. And it was an older car. It was great. It got in a small accident, but it totaled the car. And all of a sudden I had to have a car payment that I hadn't had before. And I was able to do it, but it was not that comfortable for a few months. So be prepared and don't buy the most expensive house that you can afford.
And cars are important in Atlanta because you end up living in it most of the time with the heat, right?
Well, the pandemic has given us a little reprieve, but yes.
Good. I was going to say Charlotte's bad. Even Spartanburg right now, we can get into some bad traffic.
Oh yeah, absolutely.
Guys, I wanted to wrap up with one last thing, just myths and realities. And I know Bonnie's covered one of those that I think is a big myth, and that's that you don't need a realtor. You clearly have convinced me, and I think others, that a realtor is good for when you're trying to buy a house, and it's important. What are some other myths versus realities in buying a first home or just buying a home in general?
Sure. I think one that's kind of obvious is everything you see on HGTV is not how the real estate market is. Please do not come into the process thinking that's how it's going to be. Charlotte, and I'm sure many, many other markets are very, very competitive right now. The inventory is incredibly low, and we are seeing multiple offers on almost every single property. So it's just super important to hire an agent to act on your behalf, to help you navigate the process, negotiate on your behalf, and look out for your best interests.
Awesome. Angelyn, what about you? Any myths and realities that you want to make sure people know about?
Yeah, by the same token about HGTV, those little advertisements that pop up on your email about interest rates, there's probably a lot of fees that they're not disclosing that are going to make the rates a lot higher than that. They're still very low, but not as low as the ads. One thing a lot of people think is, I don't want to get my credit pulled for a pre-approval. I don't want to mess up my credit score. A mortgage-related credit inquiry is not going to mess up your score. Banks review your credit report. They can see the credit inquiries that you make, but it is not bad. In fact, it's healthy to shop around, get more than one mortgage quote, and we can actually provide a quote without pulling your credit. But if you want to go through the pre-approval process, and you should do that. It looks very different to have your credit pulled 2 or 3 times by a mortgage bank than it does to have it pulled for like a payday loan or a bunch of different credit cards or even a bunch of different car loans. If that can signal desperation or inability to qualify, but for a mortgage, that's not the case. Another is that you have to put 20% down to buy a home. I addressed that earlier. First-time home buyers can buy a home for as little as 3%. And actually, banks consider a first-time home buyer to be anyone who hasn't owned a home in 3 years, even if it's not actually your first home. If you're not a first-time home buyer, you can put as little as 5% down. And our bank has several programs that you can use that avoid having any PMI payments. So under a conventional loan, if you put down less than 20%, you will pay mortgage insurance. But we have a professional loan program for attorneys and doctors and CPAs and dentists and pharmacists and optometrists and veterinarians, where you can put 3% down, no PMI. We also have a doctor loan that can do 100% financing up to $1.2 million. And we have some other programs for people either in low and moderate income brackets or who are buying in a low or moderate income census tract, where they can put as little as 3% down, or even in some cases 0% down. There are grant funds that are available in certain counties throughout the Southeast, specific programs for first responders, healthcare workers, educators, and school employees. So it's just really important to talk to a lender and know what you can qualify for, because even though I said don't buy too much house, you may actually be able to afford more than you think you can. So it's kind of a balance, and that's why you need to talk to somebody. The last myth I would say is that you have to be in the same job for 2 years to buy a house. Even if you started a new job recently, if your employment history is stable, or if you just graduated from school, you can qualify for a loan. And a gap in employment in the last 2 years may not disqualify you, but you do need to document the reason. For example, if you got laid off due to COVID. Now, there is one exception with that, and that is for self-employed borrowers. And after I went to law school, I had a lot of friends who worked for a firm for 1 or 2 years and then decided to start a solo practice. And it's a wonderful thing to do, but it is something I want people to be aware if you're considering that. It is very difficult to qualify for a loan if you're self-employed and you haven't been in that business for at least 2 years. So, and even if you pay yourself a salary, like if you get a W-2 and a 1099, if you own the business, you're still considered self-employed. So if you're thinking about starting a law practice and buying a house, buy the house first while you're still at your firm, and then start your practice. And then I know we're getting close on time. There are a couple of tips that I would love to share if we have time.
Yeah, absolutely. Please go ahead.
Okay, first, know your credit score. Check it regularly. You can use free apps. It's a good idea to download the report once a year, because you could have a collection for $45 at a medical copay that you didn't even know was on there, and it can take a serious hit on your credit, even if you pay all your other bills on time. Keep your credit card spending under 50% of your credit limit on each card, not just total, but on each card, because it counts. Ideally under 30%. Here's a big one. Do not take a forbearance if you didn't actually lose income or suffer a financial hardship. I'm not talking about the student loans, but for people who are not first-time buyers, if you have a house and you just stop making your mortgage payments because you could, but you didn't lose your job and you didn't have any big medical expenses or some other good reason, it doesn't really look good to a bank when somebody just stops paying their bills because they can. So don't do that. If you own a home and you took a forbearance, you have to bring it out of forbearance and make 3 payments before you can qualify for the loan. And then also just a note about refinances, because I know we're talking about home buying, but if you didn't refinance in 2020, you didn't miss the boat. Interest rates are still very low, especially if you currently pay PMI on your loan. If you've been in the house for 2 to 3 years, you may easily have enough equity to get rid of the PMI, or like in the case of our professional loan, if you're in one of those occupations, it only requires 5% equity. So it's still, if that's something, if you're not ready to buy a new house, but you're thinking about refinancing, I would encourage you to explore that as well.
Awesome. Bonnie, anything you want to add here as we wrap up?
I think, bottom line is just find an agent and a mortgage lender that you really trust and that you can relate to. You feel comfortable asking them any and all questions, because like I said, it is the biggest purchase of your life, and you'll definitely want to have the right people guiding you along the process.
Awesome. Guys, you've been great. Thank you for your time. Appreciate you, both of you, joining us today.
Thanks,
And
Tom.
Thank you, Tom, Jordan, Bonnie. It was great to be with y'all this afternoon.
Guys, our viewers, if you have any questions or comments, feel free to email me, hensontm@wofford.edu. Or if you want us to recommend a realtor or a buyer, a lender, I can help you with that as well. Pointing, not doing thumbs up and thumbs down. Appreciate everybody watching, and stay tuned for our next one whenever it comes down the pipe. But again, thanks to Bonnie and Angelyn, and go Terriers.
Go Terriers.